A very good evening to all of you. Welcome to this webinar, which is the first of the kind that we're doing over the last 10 years. Markets Mojo went global around 4 years back. Since then, we've been working on the IP and we did our internal launch of the new Markets Mojo Global around 6 months back. But what we've not done is shared with you the parameters and the analysis of all the 29 countries that we have been looking at, just the way that we did India, and we shared with you the success rates, the index returns. We shared with you, the strong buy success rates, index returns. We shared with you the performance of the Mojo One strategies for India, and we had shared with you the model portfolio performance in last couple of weeks back. Today, I am very happy to tell you that for the first time, we are creating a monthly format where we'll be sharing the same stats that we had for India for all the global countries, so that people who are interested in looking at what's happening across the globe, whether they are NRIs, which are the countries, what strategy is working well, can benefit from all of those opportunities. Now, in a nutshell, if you look at broadly speaking, in the presentation, if you look at why should our investments be limited to only 4% of the global market cap. Can I have the presentation, please? Now, broadly speaking, if you look at the total global market cap of all listed countries, it is in the range of around $127 trillion. We are a 4% participant in that market cap today, sitting at around $5.2 trillion of market cap that the Indian stock market has. So there are ample opportunities as well, 96% to be precise, outside of India as well. And if people can take benefit of that, whether, as I said, they are NRIs or if they are people who are interested in investing abroad, why can't Markets Mojo be a platform to help them invest in other countries as well? Today's presentation, as I said, is the first of its kind, where we are going to, on a monthly basis, report what's happening on the global IP across major markets, because otherwise it becomes a very, very detailed presentation. We're going to pick up a snapshot of all markets, but then we'll go deeper into the top 5 listed markets, which includes US, which includes China, Japan. So we look at the 5 most heavy market cap economies, and we'll see whether our IP is working, what is working for which country, and what is not working for which country, so that you can take an informed decision if you're looking at investments outside of India as well. Let's go to the disclaimer. The investment advisory notice, we emphasize that all investors should use the information on this webinar merely as a resource to enhance their own research and understanding. Nothing discussed in this webinar should be considered investment advice. We strongly advise all participants to check with certified experts before taking any investment decisions. Investments in securities is subject to market risk. Past performance should not be construed as a guarantee for future returns. An investment in equity and equity-related securities involve a high degree of risk, and users should not invest unless they can afford to take the risk on their investments. Before we move forward, only till the time this webinar ends for the next 1 hour, we are doing this package so that we inaugurate our global launch with you guys. 14,999 for 1 year, which includes all international countries and also the India pack. So when I say all countries, it means all countries plus the India pack as well for 14,999. The listed price on the site, it's a discount of 70%. We are doing this as a special gesture only till the time this webinar goes on, which is for the next 1 hour. There is a link placed underneath the video. If you see that link, you can take this particular offer multiple times as well, but this will only be for the next 1 hour till the time this webinar goes on. Let's look at the agenda today. We are going to look at the score efficiency. So validating our proprietary rating system across 13 countries. I've taken 13 because otherwise the list becomes very long of 29. Then we'll do deep dive into top 5 countries by market cap. Detailed performance analysis we'll see. We will look at not just the score efficiency, but we'll also look at the Mojo 1 4 stock strategies, which is Mojo Stocks, Turnaround, Reliable, and Momentum Now. How are they performing across all these geographies? We will then move on to model portfolio performance for all countries, and then we will obviously give you some top stocks across major countries as of today. Having said that, these stocks are top stocks at a point in time, so please don't take any decision on those stocks, unless you consult an advisor, to make sure that you just know what are the common list of stocks, whether you've heard of those stocks or not. We are using this. This is in no way an investment advice that we are giving you today across these major stocks on major countries. So for score efficiency, we have taken the summary of 13 countries here, which is United States, China, Japan, United Kingdom, Jordan, Canada, Saudi Arabia, Sweden, UAE, Mexico, Poland, Vietnam, and Sri Lanka. So we will be covering these 13 countries in detail today. Let's look at strong buys first. Now, we've taken a period of 5 years. I will also come to calendar year. But let's look at the 5-year performance period. If you look at United States, across the highlight is across these 13 countries, the strong buy is working very well across all 13. Now, somewhere the alpha is higher, somewhere the alpha is lower. But let's look at this 5-year track record of United States, an alpha of 127%, China 101%, Japan 152%. These are all developed economies. United Kingdom 48%, Canada 370%, Saudi Arabia 92%, Sweden 99%, UAE 235% alpha, Mexico 424%, Poland 476%, and the number in Sri Lanka comes out as the highest out here, which is almost a 1000% alpha. The strong buy index versus the relevant benchmark contained out there. If you look at the short and the medium term performance, strong buy outperforms the benchmark in 9 out of 13 countries over a 1 year, improves to 12 out of 13 over 3 years. But on an overall longer term basis, on a 5-year basis, it outperforms across all markets if you were to have the patience for a 5-year period. Let's look at buy index. Now, buy index, the story is very similar to the strong buy, barring one market, which is UK, where the strategy has not been able to generate or beat the alpha. The benchmark is 57%. The buy strategy is 33%. We will also, as we did before, because it's very difficult to just invest in strong buys. So I'm going to combine strong buys and buys together so that you can get an opinion or get a view that what happens when you get in at a strong buy and keep holding the stock till a buy level. But if you look at across all markets, the buy creates a very, very decent alpha. The alpha goes way higher when you are into smaller economies like Saudi, like UAE, Mexico, Poland, Vietnam, Sri Lanka, Jordan. These are the smaller markets where the alpha goes higher. Canada is also 93%, which is huge. But otherwise, if you see, China is 76%, Japan an alpha of 38% over the benchmark. So, buy outperform benchmark in 10 out of 13 countries in a 1-year period, improving to 11 out of 13 countries over a 3-year period. But if you look at 5-year period, it outperforms 12 out of the top 13 countries that we have here. Now let's look at buys and strong buys together. Lethal combination. If you were to go and a buy and a strong buy together, which is typically if you buy at a strong buy, keep holding the stock for a buy level as well. Now the result is very, very good. Much better than just a strong buy or just a buy. which is good news because this also gives us the longevity of holding a stock longer. If you see US, 60% outperformance to the benchmark, 149 versus 90% on the benchmark on a 5-year period. Now you must note that this is a very, very high performance. The reason being that over 80-85% of the active managers in US are not able to beat the benchmark. So a 60% beating the benchmark is a huge indicator. If you look at China, again, 84%, very high. Japan, 72%. UK is 4%. Canada, 176%. Saudi Arabia, 102%. UAE, 257%. And so on with the list going on. It's good to see that strong buys and buys work well. We should also look at whether we are able to protect the downside by giving the right sell or strong sell calls. Now, if you look at the sell and strong sell calls, they are going excellent in United States. With the benchmark being 89%, if you were to follow the sell and the strong sell, you would have saved a 60% out there, which is a huge outperformance. 2-3 places where the sell and strong sells are not working that well, they are working, but they're not working that well, is China and UAE because of the momentum market that is there. Even the sell and the strong sell have typically performed very well. But otherwise, across all markets, the sell and the strong sell basket as well is working quite decently, I would say. Not as good as the buy and the strong buys, but definitely way better than as a hedge to protect your money when the stock goes into the sell and strong sell. Across 3 markets, barring that, 10 out of 13 markets, the sell and the strong sells work brilliantly as well. Gives us a good opportunity to believe that when we give a sell or a strong sell call, then it can be prudent for investors to follow that with the discipline to make sure that there is not wealth destruction that is done apart from wealth creation, which comes as a buy and a strong buy basis. Now, let's look at the key takeaways in the first section. So, strong buys, 100% success rates across 13 countries on a 5-year basis. Strong sell, 10 out of 13 countries accuracy in predicting losers over a 5-year basis. And does the time horizon matter? Yes, outperformance over a 5-year period is much higher than outperformance over a 1-year period. What are the learnings that we are getting out here? Quality transacts geography. Our ratings work typically globally. Patience is key. Holding periods need to be 3 to 5 years, and avoiding losers is equally important as finding winners. What to do? Focus on strong buys and buy rated stocks. Avoid anything that is rated at sell and strong sell. And think a minimum of 3 to 5 year period. You need to look at these as the key takeaways and learnings from broad interpretation of the IP that we have seen across these 13 markets. Now we are going to go deeper into these 5 markets, which is United States, China, Japan, UK and Canada. We will go deeper in these markets as compared to the Mojo One strategies, the model portfolios, and we'll also look at the top stocks out there across these 5 markets. So stay patient for me to reach to the end of this. Now, if you look at calendar year performance, this is a complete, you can click a picture of this. This is a complete index performance of strong buy plus buy, strong buy, buy, hold, sell, strong sell, and strong sell plus sell together on a calendar year basis from 2019 onwards to 2025. The greens are where we have done better. The reds are where we have not done better. And we've not given any color to the hold category, which is right in between, because you can hold it till hold, but if you see the hold category versus the benchmark, that has also done pretty decent. Now let's look at the United States as a detailed one, and let's look at what is happening out here. So the IP is working excellent in the bear market, with the market corrected by around 20% in 2022. The strong buys only fell by 3%, and the combined strategy of buy and strong buy together fell only by a 7%. So downside protection is working very well in United States. If you look at the upside of the strong buy and buy, there is benchmark which has gone 29%, and the strong buys and buys have gone at around 36%. The strong buys alone have gone 34%, buys alone have gone 37%, hold is 26%, and it is a complete symphony if you go down into sell, and strong sell plus sell combined at 10, 4 and 8%, which is underperformed the index, which the case should be. Now obviously there are 4 or 5 periods, which is 2025, 12% versus 15%, and buys at 8% versus 15%. 2024, although the strong buys worked, but the buys were at 20% versus 20%, so marginally underperformed the buys in 2024. And in 2023, there have been 2 patches of underperformance, which is 23% versus 25 and 21% versus 25. Otherwise, the strategy has worked very well. I will come and tell you some combinations to look at when you're looking at bigger markets, what you should be looking at, because once I go through the Mojo One strategies, then we'll be clear in terms of what's working and what's not working. Let's now look at China. So in China, the buys are working very well, but we have some deficiency in the sell calls, because even the sell calls have worked well on a 5-year period if you were to look at the calendar years. So the top 4 lines that you see, which is strong buys plus buys, strong buy, and hold, have worked very well. But if you look at the sell and strong sell, they have also done pretty decently. If you were to look at the benchmark, is down 15%, but our sales were down, for example, on a 2022, I'm taking that year because that was a negative year. They were only down by 7%, strong sales were down by minus 4%, and strong sell and sell combined were down by minus 5%. Now, the performance of Japan looks very, very good. If you look at the calendar year starting 2019 onwards to 2025, the strong buys have worked the best. Then is the buys, and then is the strong buy plus buy category, and then is the buys. And the performance is equally good on the strong sell and sell combined. Again, what we are seeing is in the bigger markets, our protection works way better, creating a disproportionate alpha. If you look at inside of 2022, while the benchmark lost around 11%, which is negative 11%, the strong buys actually gained 10%, which created a 21% alpha. And the combined strategy of buys and strong buys gained 5%, which created a 16% alpha. So this is exceptional downside protection that we're seeing if you were to look at Japan. Now, I will come to a very detailed analysis of all of this. So stay with me because, I need to sum up all of this on one slide, which I'll come. Let's look at the weaker market that we have, which is the UK out here. Although, again, in the downside market, which is the story of 2020, where the market crashed 15%, negative 15%, the strong buys actually returned a plus 13%, and the combined strategy returned a plus 10%, which is huge alpha of almost 28% and 25% respectively. So barring 2022, if you were to take that as an exceptional year, which is the down year, where the markets went down by around minus 1%, where we suffered on all the strong buys and buys. Otherwise, the strategy has worked unanimously across the last 5 calendar years. Let's go to Canada. All in all, a green slide, barring a couple of patches. Canada has worked very well for us. If you look at the performance on strong buy and buy, excellent. Strong buys the best, which is 72% in 2025, which is the current year that we're looking at, versus the benchmark of 18%, 50% versus 18% in 2024. All going very well. So Canada is one country which has done exceptionally well. Now let's look at two exceptional years that stand out. In 2025, the strong buys had delivered 72% versus the benchmark of 18%, which is a 54% alpha. And if you were to look at the bear market scenario, which is 2022, strong buys have gained 24% versus the benchmark lost 9%, which is a 33% alpha. It has played a good offense and a defense both. So Canada works very well for us. Now, let's look at some of the snapshot of all the slides that we've seen so far. Canada, if you were to see, comes out as a clear winner on a 5-year with an alpha of 370% based on 450% versus the benchmark going up by 80%. The crisis protection is best for US, saved 16%. And the most momentum that we have seen in our IP comes in China, which is in buy and hold outperformance. What we are seeing now, which is the right side of the box, which is your learning, if you can see, that in developed markets, the quality of rating matters a lot, both to create an alpha and to hedge the downside on a strong sell and a sell basis. So strong buys and buys work very well for developed markets. Emerging markets, markets like China, which are in momentum with higher growth rates, we've seen momentum works very well. So even if the rating is lower, which is a sell or a strong sell, it tends to deliver a higher alpha as well. It can possibly beat the benchmark is what we've seen. And the key learning that is coming from all of this is that the longer the time invested in any of these categories or baskets, the better the returns. But then which strategy should you use in which market is paramount to know. So if you were to pick up this couple of things that happens in this market, so we should be using that strategy more, or a couple of this. You need to know about the IP, that the way that we have done the various markets and the way we have designed the IP, not everything will work everywhere. There are certain patches of excellent work, and that is something that you need to keep observing. As I had broadcasted last time, on the India piece when we reviewed the whole performance, that there are certain things that work very well in certain part of the market, there are certain things that work in the other part of the market. There are certain strategies that work for a certain market, and there are certain strategies that may or may not work in every market. What are the strategies that work the best here? Let's look at our 4 strategies, which is hidden turnaround, where we identified undervalued companies. Momentum now, where we look at upward market trends and rapid growth. Reliable performance, where we focus on stable companies with consistent long-term growth. And Mojo Stocks, where we look at high potential innovative stocks with disruptive power. Let's look at these 4 strategies and see which one has worked for which country. Now, if you look at Mojo Stocks actually has not worked very well on a 3-year basis for United States and China, but on a 5-year basis, it has worked very, very well. If you look at the alpha of 23% and 20% over a 5-year period. So, the strongest fundamental stocks, because of the disruptive innovation in both these countries, may not get rewarded in the shorter run. Because when we look at a 5-year, we are looking at existing companies who are typically where we have that long-term profitability track record, and hence in the markets where excessive innovation is happening, Mojo stock is not able to capitalize that, and hence the alpha comes in a little delayed, which is on a 5-year basis. But if you look at the other markets which is like Japan, United Kingdom, and Canada, from a 3 to 5 year basis, the quality is getting rewarded. If you look at 3-year performance, 8 out of 13 countries have outperformed. If you look at 5-year performance, again the same hypothesis that is coming out, the longer you stay in the market, time in the market is more important than market timing. I repeat, time in the market is more important than market timing. So if you were to spend 5 years, you are getting a perfect score of all 13 countries outperforming on Mojo Stocks. The key highlight out here is the smaller markets, which is like UAE, Mexico, Sri Lanka for that example, have really outperformed on Mojo Stocks on a longer term basis. Let's look at momentum now. 9 out of 13 markets. Now this is a very specific momentum strategy. So when the market crashes, obviously this strategy does a bad alpha. If you look at US, for example, the strategy gave only 32% versus the benchmark of 76%, but then it worked better. But the strategy, if I were you, I would not look at momentum now for United States. On a 3 and a 5 year basis, it's not worked. China is decent, but it is not some great shake. Japan is not worked that well. United Kingdom is fine, but it's not that it worked very well. So momentum now, essentially, if you come down the list, which is UAE, Mexico, Vietnam, Sri Lanka, Jordan, these kind of countries, momentum now is working essentially in emerging to smaller markets, because that's where the main momentum is coming in. It's catching in the main momentum area. So momentum now may not be a great strategy for developed markets, but it may be a very good strategy for markets which are underpenetrated, which are frontier markets, or which are emerging markets, as we've seen in the case of India as well, that momentum now plays very well. Similarly, it plays very well in emerging and in frontier markets, but it doesn't deliver that good results in developed markets. So if I was to invest in any of these developed markets, I would either look at Mojo Stocks, or I would go and see the reliable performers as well. Let's look at the reliable performers. Now, if you see reliable performers, I think it is, as the name states, seems to be the most reliable strategy. It is working actually almost or better than the Mojo Stocks. 3 year success is 11 out of 13 countries, and in a 5 year basis, barring just the emerging markets, it is doing very well across all markets. So if you were to look at developed markets, I would say reliable performers comes out as number 1, and number 2 is then Mojo Stocks. So that's a very, very big key takeaway. Now, if you were to look at even India, as I had shown you last time, reliable was coming as number 1, Mojo Stocks was actually number 2. So reliable performers is a great innovation that we don't talk about much, that we've done. And I don't think so users use it enough to try and see, because Mojo One is an older strategy, so everybody trusts Mojo One, it is delivered. But you have to closely watch reliable performers, because wherever I'm seeing the results of reliable performers, it's outshining every other strategy across in India. And if I were to see across even all these markets, reliable performers seems to be. So we've got something great on our hands, which I think is a hidden gem, which is underappreciated. But I think now that we are talking about this more and more, and we are giving you this information, you would be inclined to more look at reliable performance if that suits your risk profile. Let's look at hidden turnaround. Patchy results, I would say, because again, what it is showing you is on a longer term basis, it has beaten in 10 out of 13 markets. But it is very concentrated to markets like, China, Canada, UAE, Sweden, Sri Lanka. So everything seems to be working well in Sri Lanka somehow on a 3 year and a 5 year basis. But it is not a short term strategy. The turnaround time seems to be a higher one when we look at the hidden turnaround. So it is on and off, but if you are investing in China, then it works great across short-term and long-term basis. UAE works great short-term and long-term basis. Sweden works great on short-term, long-term basis. And if you were to look at Sri Lanka, works fabulously in a short-term with an alpha of 526, 709% versus 183%, 1,665% versus 283%. Works huge in Sri Lanka. Sri Lanka, it's a clear winner. And it struggles in Saudi Arabia, Poland, and in UK. So, now broadly speaking, what is the outcome of this? We are seeing that in emerging markets, most of the strategies typically work. But in frontier markets, across strategies, there is a great 5-year period return. In developed markets, because most of you are developed markets investors, reliable performer typically works the best. If you look at Canada, now I'm looking at the best performing strategies across 5-year period for all countries. If you look at Canada, reliable performer works the best with a 259% return. If you look at US, reliable performer works the best at 153%. If you look at China, reliable performer works the best. If you look at Mexico, momentum now works the best with 632% alpha. And if you look at Sri Lanka, reliable performer works the best. So if you look at these 5 countries, in 4 out of 5 countries, one strategy that stands out. In fact, if I were to add the 6th country as India, it would also be reliable performers that works the best across these markets. It's a very, very big takeaway, and people who are on this webinar, this is a huge thing for you to start taking reliable performer strategy more seriously. It is working unanimously well in top markets and in India as well. So 3 truths, fundamental truths that are coming out. You are not underinvested. You're only overconfident. 96% of the world's populations are locked away. Let's look at quality first. Strong buys outperformed in 100% of the countries over 5-year period. As we have seen as the outcome of first section. The second section outcome is as you stay invested from a 1-year to a 5-year period, the outperformance increases, and it is equally important to avoid losers as finding winners, as we have seen that strong sell saved investors from losing almost 75 to 165% in developed markets. We have given you the 4 strategies, but most important outcome of these 4 strategies is reliable performers wins typically 92% of the time, as we've seen in this data, which is the highest success rate that we've got across all 4 strategies. Now let's move to the model portfolio analysis. We have selected certain portfolios for certain markets which work the best, and those are only live on the site. After doing multiple iterations, we selected certain portfolios across markets. So there are like 5 portfolios in some markets, there are 3, there are 2 as well. I'm going to quickly go through US first. If you look at US, 1-year return, let's look at the 1-year return first. The 1-year return, the benchmark has done around 20% positive. We've got 4 portfolios in US, large cap, mid cap, small cap, and ultra aggressive. 3 out of these 4 portfolios in the last 1 year have outperformed the index. Large cap leading it by 32% portfolio return versus benchmark of 20%, which is a 12% alpha. Mid cap 21% versus which is a 1% alpha. Small caps are almost at the index level, 19 versus 20, which is minus 1% alpha. And ultra aggressive has gone 27%, which is an alpha of 8%. If you look at 5-year returns, all strategies have outperformed, but large cap is working the best in US with a 13% outperformance. And if you look at since inception, obviously all strategies have outperformed. Again, large cap leading the gang. So now, if I were to look at creating a model portfolio for US, my best bet would be to go in towards a large cap portfolio or an ultra aggressive portfolio depending on your risk profile. Quality mega caps, which is large caps, dominate 7.3 times better alpha versus small caps in efficient markets, as we've seen. So this whole small cap story may be very limited to the story of developing markets. But if you look at larger markets with larger companies with larger market share, I think the dominance is very high on larger companies out there. So it's an interesting learning that is coming out that if you were to look at larger markets and try and create an alpha, a concentrated portfolio of large caps may work better than going down the small cap route, which can be a good story, as we'll see in smaller markets like India, where there is a lot of movement of smaller companies to mid-sized companies to big-sized companies that is happening. Let's look at China. In a one-year basis, typically we should not look at a 1 year, but let's still look at the 1 year basis. The small caps have worked the best with a 43% return over a 21% benchmark return, which is a 22% alpha, then ultra aggressive, and then mid caps at 32%. If you look at a 5-year basis, a mid cap and small cap and ultra aggressive has worked very well. And if you look at a since inception basis, obviously the small caps have worked the best. Now, if I were to look at China, then with the way the growth rates are out there, it is typically giving you a very, very important message that the higher the growth rates in the company, the lower companies get rewarded much higher than the larger companies. But where you have lower growth rates like developed markets, the larger of the companies take the major share. So if you're looking at high growth countries like China, you would typically try and consider a small cap or ultra aggressive strategy, which can generate disproportionate alpha to the index on a shorter and a longer term basis. Now, if you look at Japan, we've got two portfolios. Both are doing very well, large cap and mid cap. Again, in Japan, the growth rates are very low, and hence your large caps are working very well. So there is a clean thesis that comes out here, is that the larger the market cap, the larger companies typically reward you more. The smaller the market cap or the developing or the larger the growth rate in that particular market, you have a higher chance of creating alpha through a smaller layer of companies or a mid layer of companies. If you look at UK, as we had seen that the IP was all over the place at UK, but the portfolios are doing very well. Again, if you look at small cap and ultra aggressive, two portfolios we've launched in UK. The portfolio on a 1 year basis, the small cap has generated 34%, which is an alpha of 14%. Benchmark has done 20%. Ultra aggressive has done 27% versus the benchmark. On a 5-year basis, there's an alpha on a since inception basis, there's an alpha of 4 and 5%. Let's look at Canada. Again, mid cap. Best strategy is mid cap, consistency. Both the strategies show positive alpha on a 1 year and a 5-year basis with 33 and 10% alpha. Now, some of you may say that, to ye kya ho gaya, right? So what is the big deal about all of this? Now, you need to know that these are bigger markets. This is not India that we're playing here. In these bigger markets, the growth rates are very, very low. The potential to beat the benchmark is very, very low, right? So beating the benchmark itself, like a 1 year alpha of 10% and a since inception alpha of 7% of mid cap, is a very, very big deal. If you're not aware of this, please do some Google search and find out how many of these funds in these countries have beaten the benchmark. In UAE, we have two model portfolios, small cap and ultra aggressive. If you look at a 1 year basis, small cap is at index of 8%. Ultra aggressive is at 15%, almost 100% outperformance to the benchmark. On a 5-year basis, the alpha goes up to 19 to 12%, and since inception, a huge alpha, 128% for small cap versus index of 108%, and ultra aggressive at 129 versus index of 108, which is an alpha of 22% and 20% respectively. If you look at Saudi, again, alpha is there, not in the shorter run. There's a marginal alpha, which is capital protection, because the market is down -3%. We are down -2%. On a 5-year basis, we're 5% up on both strategies. On since inception, we are 8 and 7% up the benchmark. If you look at Mexico, we have one fund which is on a short-term basis, 17% versus benchmark of 24%. On a 5-year basis, a 74 versus 70, and on a since inception of 60 versus 48%. Sri Lanka is a rocking story. We have outperformance short term, which is unbelievable, of 7. Benchmark has gone up 79%. And the mid cap and small cap and ultra aggressive, which is obviously a smaller market. So that's the reason here the small cap and mid cap start working. Although the large cap is delivered at alpha, at benchmark, but mid cap, small cap and ultra aggressive have given great returns. And if you look at 5-year and since inception, again the same story that the schemes have done. The mid and the small cap and ultra aggressive have done way better than the large cap. I may want to avoid smaller markets. Now let's look at some top performing stocks in the last 1 year. I'm looking at 1 year because there's no point doing a 5-year analysis out here. We will look at United States today, where it stands. As I said, that there's a disclaimer on this, that these are as on today, and these may change. So if you're not a subscriber and you can't track these stocks closely, please avoid taking any exposure. If you are a subscriber and you're taking exposure, please do your risk profiling. Please consult a certified expert before you do any decision on that. This is merely for consumption of for you as a research output. 3 companies that you may not have heard. LXP Industrial Trust, a very high return outperformance of around 435.1%. Amprius Tech, manufacturer of high energy density silicon anode lithium ion batteries. These are United States 3 top performers with 274%. Lumentum Holdings with 259%. 2 of these are hidden turnaround. One of this is reliable performer in the current list of companies. Let's look at China top 3 performers. Victory Giant Technology, reliable. Again, 2 hidden turnarounds and 1 reliable. Shandong High Tech, 403 versus index of just about 20%, so 382%. And UAE Semiconductor Technology of 402% versus a index of around 20%. These are 1-year performances since the time they got selected into these strategies. Let's look at UK. Metals Exploration. Again, here you have 2 reliable performers. Hochschild Mining and Helios Towers PLC, both are reliable performers at an alpha return of 78 and 54%. Metals at a return of 94%. Let's look at Japan. App Bank, 317%. 2 reliable performers, 1 momentum. Fujikura Limited, 272% return. Part of Momentum Now strategy, outperformance of 232. And Seacock Jikin Company Limited, which is a reliable performer participant at a 149% return and outperformance of 111%. Let's look at Canada top 3. Ocean Gold, a part of reliable performers, 605% 1-year return versus outperformance of 587%. Lundin Gold, 242%. Momentum Now, an outperformance of 221%. And G Mining Ventures, a momentum now strategy return of since selection of 175%, with an outperformance of 157%. So where you go to, if you're going outside of India, Canada for growth, and you go to US for stability, and obviously Japan for precision. What is a possible best combination? Strong buy with reliable performer strategy. If a stock is coming as a reliable performer and it's also a strong buy, that seems to increase our chances of returns. What clearly comes out is that you need to seriously think about when a stock is rated as sell or strong sell, because we've seen that most of the time that comes right in terms of price correction, and when to act when time compounds quality. So you need to make sure that these 4 points are etched in your mind when you're looking at anything which is international, which is typically reliable performer with strong buys can be a great strategy, and that is not just for these markets, also applicable for India. And typically avoid sell and strong sell and stay invested for a longish period of time rather than looking at your portfolio on a 1 year basis. So we're going to end this offer. We had at the start of this webinar, we had given a 1 hour offer of 14,999 for 1 year for all 28 countries plus India. So India is included in this particular pack, which is typically a 70% discount that we were giving only for the participants of this particular webinar. With that note, let's go on to the Q&A. Mr. Rahul Kumar Jain wanted to invest in Africa and Latin America. Are these countries on their country ETF options available on your platform? You had committed for launch of zero brokerage trading platform for Mojo subscribers. Can we get it on global stocks, and by when? Sir, I had not committed. I said we may. There's a difference in committing and there's a difference in saying we may move towards that. We currently don't have any plan of launching a zero brokerage platform ourselves. However, what we can do is that we can tie up with somebody so that you get a very seamless interaction from Markets Mojo to that platform, whether it is locally or whether it is globally. We can try and do that. If you want to invest, so we've not launched the fund platform for all global markets. That is still to be done. We are currently only on listed markets. So ETFs and fund platforms we haven't started as yet. Saurabh, Mohit sir, I have been on Infinab, now known as Markets Mojo Global subscriber, for almost 1.5 to 2 years and have my membership for another couple of years. Couple of points which I'd like to mention. The prices displayed for stocks have a lag of 1 day. Can you please look into that? Secondly, the result dates are not updated on the latest results announced. Thirdly, the additions or deletions on Mojo Stocks for international markets doesn't happen regularly. If you see the list of Mojo Stocks also, you will see that it happens once a month. Okay, Saurav, I'll look into that. Let me just take one by one. The prices delayed for stocks for 1 day. Yes, the prices are delayed by 1 day. The reason is that we have to go to all these 29 markets and subscribe to these real-time prices. And you know, it doesn't make sense because we're anyways doing a fundamental pick out here. So we've not taken that exposure by going into 29 markets and subscribing to real-time prices. So unlike India, we haven't launched, and I don't think so that's something that it's in our plan to go into 29 markets and try and look at real-time prices. Results are not updated on the result dates are not updated. I will check on that, Saurabh, and if that is the case, I will make sure that is implemented immediately. And let me also check on your third thing, which you're saying that the Mojo Stocks, you know, we normally now send a unified mailer to all global subscribers that these are the stocks which are coming into respective markets, and these are the stocks that are moving out. I don't know whether you're the same Mojo One, you know, mailer that you get now has an international version. So if you look into it, you will see what are the latest additions across all markets that we're doing, not just India. We started that around 3-4 months back. You may have missed it. But if you are still have any questions, you can please write to us on customer service and let me resolve that for you. Mr. Rahul Kumar, we would be nearing burst of AI stocks being super expensive in global markets. What are your views? Mr. Rahul Kumar, it is basically, my views are different from the market, and I may be wrong. I'm not an expert out here on stock selection. But what I know is that AI as a phenomena is here to stay. AI valuations are here to stay. This is a ride which has just started. So if we are seeing higher valuations always will keep getting corrected over a period of time. But I think the AI is a huge win, especially for US and China. India is a laggard out there. And I think the revenue potential that they've created by creating these AI tools is next to imagine anything. This is going to be a huge revenue spinner for these markets. Valuation always autocorrects over a longer period of time, provided the earnings coming. And I personally believe that AI earnings for US and China, specifically for Chinese markets, but for US is going to be a huge opportunity moving forward. I think if you ask me, US has played a master stroke with AI. And I don't see AI being a bubble. I don't think so. AI is a bubble at all. I think it's a reality. It's a next decade reality, and I hope to God that India catches up faster. But I personally feel that it's a very big opportunity. And these are, as I said, I'm not an expert. These are my personal views. Ajay, very impressive. Mohit, I'm assuming the returns are in local currencies of that market. Yes, sir, they are in local currencies. Have you factored in exchange rate impact on the returns with respect to INR? No, sir, I have not captured. If it's a USD return, I've taken US dollar return. Assuming that if you're an international investor, then you would be investing in that particular currency. I haven't factored in the local currency impact on these. Let's take one more question. Satish, how to invest in these countries? Also, if you give the plan for 2 years with the price, I would like to take. Mr. Satish, I have given a 70% discount on 29 markets, which also includes India. I can't do any. In fact, we are planning to change this today itself. So this was only for right now. Everything is not about just dropping the price. We've always valued our customers and given them the best options. But I don't think so we'll be able to go any lower than this. These are 29 markets, sir, we are talking about. We sell India as a single market at 12,999. We were giving minus the offer days. 14,999 for 29 markets. This is not going to say, as I was very clear, that this will be only for the next 1 hour, which is now going to end. You need to have a tie up with some international broker to invest in these countries. Sorry, currently we don't have a broker tie, but we'll surely try and get one. So thank you so much. My voice is gone. I'll see you.